This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Thanks for tuning in today to the Alternative Investing Advantage podcast. I'm your host, Alex Perny. Today on the market recap, we'll discuss a few interesting items that are facing us in our markets today. First up, Democratic lawmakers are calling for a corporate tax rate increase, which is kind of interesting. Not a huge increase by any means, but certainly something to be aware of, especially when looking at other factors such as the price of goods and the consumer price index. The rate increase proposed is going to go from the current rate of 21% to 26.5%. So not a substantial one, but definitely enough of one to be aware of. They're also proposing a couple other taxes, a 3% surtax on the nation's top earners, and an increase to the capital gains tax. Now, the capital gains tax, especially for our listeners that are interested in using IRAs for more of their investments, is definitely one to keep an eye on, because if the increase to capital gains goes up, some of the investments that may have been a better idea to do outside of a tax shelter now are looking significantly more attractive to do within a tax shelter. As most of you know, and if some of you don't, IRAs are a great way to shield yourself from having to pay capital gains tax. Now, whether or not you're using a Roth or traditional or any other type of IRA, you don't have to pay a capital gains on the sale of any type of asset within an IRA. So whether that is a sale of a security, such as Microsoft, IBM, Tesla, if you make money on that, you don't have to pay any type of capital gains now or ever on it. Sometimes you might just have to pay a little bit of marginal tax when you take a distribution at your ordinary income rates, which can certainly be something to utilize losses and deductions to help mitigate and offset when you're in retirement. But doing these kind of things within IRAs is now going to be ever more beneficial to you as the investor. So keep in mind that if these things do come to fruition and increase in any of these types of taxes, looking to utilize government sponsored plans such as IRAs and other accepted tax shelters will be much more attractive. So I'd encourage you to do some more research into that and maybe start doing some more of your investing through these types of platforms. Markets are continuing to climb on all major indexes with specific interest around crude oil prices. Now, crude oil has been something that has been hugely decimated throughout the entirety of the pandemic, with international, domestic travel, and pretty much all forms of transportation taking a huge hit with COVID-19. Now we have a rebound, and we're seeing for the first time this month a increase to pre-pandemic levels. So the price for sweet Texas crude has risen to before pandemic levels, which would have been February of 2020. So this is great news for the energy and transportation sectors. Hopefully we can continue to see a rise in those industries, as so many of them have been so hard hit by the COVID-19 pandemic. Couple interesting movers right now on the market. Apple held its annual fall event yesterday, and it will remain to be seen if this can prop up the company's earnings to continue a stock price increase as they have been over the past few quarters. Now, the release of several new products and a new operating system has been expected. The operating system for iOS 15 having several several newsworthy points to point out, namely with the recognition of image filtering for use on iCloud. So we will see how the implementation of this will come to fruition for Apple, and if it will continue to help prop up their stock through the end of the year, which these events typically have had the effect of at least being, if not an increased stock price, relatively neutral, but typically not a detriment to it in any case. Inflation is still a looming threat right now, with the consumer price index continuing to rise. So the ability of the dollar to purchase a certain amount of goods compared year over year, that is continuing to go in a non-favorable direction for consumers. However, interest rates are continuing to be low. The Fed has raised them a little bit, but we are looking to expect to see these increase steadily over the next several months. However, this has had the effect of helping to offset some of the other inflationary factors for that. With that said, that's the market recap. Today on the What Is, SEP IRAs. These hugely useful plans for small businesses and really any size business that want to utilize the ability to defer one's compensation as the basis for an employer-sponsored plan are fantastic ways for businesses to have cost-effective retirement plans for their employees. Now, on face value, a SEP IRA is a supercharged traditional IRA. You get the benefits of all the tax deductions going in and then getting to defer your taxation down the road, with the added benefit of a SEP component being able to defer up to 25% of your compensation, not to exceed $58,000 per year. With these plans, unlike a 401k, you have a much lower cost basis to the employer to administer these plans. There's no costly plan testing or outside auditing that has to be done, such as with a 401k. The employer does not also maintain any fiduciary liability as with a 401k and being a trustee of those plans. So the amount of liability that a employer has for maintaining these plans is significantly less as well. Now, especially for those of you that may be self-employed, a SEP IRA is a fantastic way to help you shelter some of your compensation into a plan that will allow you to create very large tax deductions, especially for those that maybe earn a lot of commissions, such as realtors or other sales individuals that are maybe independent contractors. The SEP IRA is a great way to help reduce your taxable burden by being able to defer a portion of your compensation into this plan, and thereby creating a significantly larger deduction than you would from otherwise just being able to contribute your $6,000 or $7,000 per year to a regular traditional or Roth IRA. However, one of the downsides of the SEP IRA is that these plans are only deductible contributions, meaning that if you wanted to have these be after-tax contributions, a Roth IRA, unfortunately, there is no Roth SEP IRA. You are able to convert your contributions into a Roth IRA, but if you are utilizing a SEP, all of the contributions to these plans have to be made on a pre-tax basis. Thank you, everyone, for joining us for a new edition of the Alternative Investing Advantage podcast with Advanta IRA. Our wonderful guest on today is Peter Fortunato. Thank you very much for being with us today, Pete.
I'm looking forward to it, Alex.
Fantastic. So before I kind of get in and start the bio, I like to get people hooked in. And the question I have for you is, off the top of your head, quick thought, what is the most interesting way you've ever found a deal? I know you've had many years of experience of investing, but what one boils right to the top when the most interesting way that you found a deal?
I've asked people for help and they've helped me. I've asked them, said, I'm looking for a house in this neighborhood. Would you please call or have your neighbor call when there's an opportunity in the neighborhood? And people call me. If you don't ask, you don't get. And you got to get out in that neighborhood and ask. You recruit allies every minute. And it's worked for me wonderfully for 56 years.
That's great. And along that same line, one of my favorite stories that I've heard from you is it involved a lady standing in her front yard kicking a realtor sign with her foot. Maybe you could tell us a little bit about that story. I think that was involving one of your kids, but I love hearing that story, and I know people would as well.
Yeah, well, many of the deals we do are repeat and referral business with people I've done business with over a very long period of time. And my son, Jay, made a great lease option deal with someone who I did not know. And so I said, how did you find that? And he said, well, Dad, you say, look for uncomfortable circumstances. And I saw a woman kicking a realtor sign. So I stopped and said, what's going on? And he made a great lease option deal with that lady, helped her out and helped himself.
Yeah, that's one of those things where even when I get asked about my professional career of what's some of the more interesting things you've heard, that one shoots right to the top of interesting ways that someone has found a deal in real estate. It's not all just get on the MLS and type a search criteria and get your realtor's license, which is
I had a
certainly.
lady say, if you'll just find a place where my sister can live, so she no longer lives with me, any deal you need to make will work for me.
That's fantastic. So, I like to start out with that kind of a good way to get people, interested in what we're talking about. But tell us a little bit about yourself. I know you started your career up north in Massachusetts quite a few years ago, and have kind of worked your way down the East Coast, and now you live down here in sunny Florida, where the deals are just as plentiful, but the weather is slightly bit better. So, tell us a little bit about what are the origins of Pete Fortunato, the investor, and what kind of has brought you to this point in your life.
Well, before I was a real estate person, both investor and business person, when I got started, I was in high school. And in June of 1965, I graduated from high school and went out in pursuit of some assets so I'd be free to do whatever I wanted. When I was a very, very, very young person, I read American history. And I was involved with wonderful neighbors all around me. And so reading American history, I learned this is a land of opportunity. My favorite reading was about the American Revolution, about the people who went and had a tea party and threw the tea in the bay just so that their neighbors wouldn't be stuck with the tax and the onerous control of a government overseas. Then I read over and over again and have many copies here in my house of the Declaration of Independence. And those things, the Bill of Rights, have been very, very important. And I knew that was part of the land of opportunity where I grew up. Then I looked at my neighbors, and they all came from all around the world. They came, their grandparents came, their forefathers came, they came to the United States and to my neighborhood on the North Shore of Boston to make a better life. And they did make a better life. I saw it every day in the parents and the wonderful, wonderful families from all backgrounds. And so in seeing those opportunities and in reading that history, I aspired to do the same. And so when I got out of high school, my job was to get some assets, because it's the assets that can provide me with the income, which would let me be free to do whatever I damn well pleased. And that was my goal. Now, my goal was to go to a ball game or to sit and read or to interfere in the lives of my neighbors. Other people have different goals, but all Americans aspired to build a better life and a better future for their families and their loved ones. And that's the way I grew up. Now, I was blessed to have great examples, not only in my neighborhood, but in my family. My grandfather came from Italy 100 plus years ago now. And when he would tell me when I was a little kid of 10 that he arrived with 50 cents in his pocket, and I would look horrified, and he would explain to me, well, I could buy a loaf of bread for a penny. So while it was not a lot of money, it was more than it sounds to you. And it gave me a chance to survive until I could get a job and create some money. And the job enabled me to create some money, which I invested in my own business. And then my own business enabled me to buy an apartment building with a barbershop on the first floor. And then that barbershop and the rents gave me a home in which to raise my family and gave me an income. Well, those kinds of examples led me to the dream of being able to do the same thing and get enough assets to set me free. So when I got out of school, I had that dream. The dream turned into a goal. The goal turned into plans, which were followed by actions. And I took off on that journey from a dreamer to someone with enough assets so that they're free to do whatever they want. And the assets are producing the income to fund the lifestyle.
Great. And those assets, I mean, obviously from the nature of what most people know you for is real estate related, but you really haven't tethered yourself to that, by any means, have you? I think I've heard some stories about, you trading, different things at meetings. I mean, a lawnmower can be an asset to provide you with the income you need to do something just as well as a piece of real estate can. Is there some different types that you've gravitated towards over the years? And obviously the example with your grandfather is a great way to kind of show you the value of being able to have real estate for, part for your business and part to raise your family in. But, what kind of other branches have you gone into?
Well, when I was in college, I was buying small multifamily. Then when I got through college, Jean and I got married, and I wanted to spend more time with her and then with my family. And so we went from multifamily, which took more of my time, to single family, which allowed us the freedom. That was my investing. And my investments are entirely really now single family houses. The currencies I used were all kinds of things. I don't see the currencies as an investment, but any skill I have, any asset I have, any goods and services I can provide are a currency that I can use. One of the stories that people enjoy is I was at a RIA meeting and a man got up and said, gee, I'm going to sell a house. And of course, I always ask the question, why would you sell a nice house like that? And he said his daughter needed a better car, and his daughter was a single mom with 3 kids, and her car had broken down 3 times in the last month, and he and his wife were worried about her every minute. So they made the mistake of thinking they had to sell their house, give up a perfectly good rental house to get the money to get a car. And that step through money is a dangerous, expensive step. And so I gave him my van for an option on his property to buy it from him in the future so he could keep the property, keep the rent, and have a car for his daughter. And everybody remembers the story because I had to hitch a ride home with one of my friends because I gave him the car right then and there. But that was not an investment. That was a currency that I was able to use, which somebody else valued differently than I valued it.
That's a really interesting point of values and currencies going into something like that. That's a really interesting way of thinking about it. So, coming in from doing multifamily to single family, was there any type of shift that you really saw when you moved from the Northeast down to Florida? I can't remember exactly when you moved down here, but markets are different across many different aspects. But are there any kind of specific changes that you saw when you moved down south?
No, not really. Just I had great friends and allies in both markets. So I was coming back and forth doing business here in Florida and investing in Florida before I moved here. But the single family houses in good neighborhoods entice tenants that want privacy. And the multifamily entice tenants who wanted services. And when I was in college, I didn't mind providing the services in order to have more income. But once we were married and we had our family, I was jealous of that time. And so I'm good at providing privacy. I'm not very good at providing services. So I went to single family houses alone.
Sure. So it sounds like your core kind of focus in going from multifamily to single family was a difference in lifestyle that it afforded you. Is that kind of something? If there were one thing that you could tell someone that was trying to get that same kind of shift in their lives, what would it be? Because I think a lot of people think that way. They're like, hey, I'm doing this, I want to make the transition into this. Is it just kind of taking the first step? Is it attending a meeting? Is it listening to a podcast? If someone were going to try to, do that today of what you did so many years ago, obviously technology and the way people interacted has changed. But if someone's just listening to this and they say, what, that's great, what would be kind of a good place to start? And even if it's just reading a book, if it's something you've read recently you think would be good, or a meeting you think is good, I'll let you go.
I would look to improving the quality of my investments earlier rather than later. And by quality, I mean, I would rather have a 5% cap rate that involved money only in earning the 5% than a 15% cap rate that involved money and arm wrestling or weapons to developing the yield. And
Sure.
So moving quickly to higher quality is an adjustment that I would make. And that said, I have stayed invested, even when I was in college, in really outstanding neighborhoods. And those neighborhoods have been huge in terms of making the success, because I didn't burn out. And some people do burn out because they make the mistake getting way too aggressive.
Oh, absolutely. Yeah, go ahead.
I would urge you to do, one step at a time, digest something and see where you are before you jump in.
Good point. Now, good neighborhood means something different to everyone. It's not necessarily the neighborhood that has, the big gate in front of it that keeps everyone out and has people that really live there. When it comes to things that have afforded you the ability to kind of transition your life and live the life you want, and by extension, your kids. I mean, one of your children bought and flipped a house 4 blocks up from me. Thing looks great. I'm very happy with the fact that property sold in my neighborhood and the prices of homes in my neighborhood are going up. So, I've gotten to experience part of the Fortunato, investment strategy, myself. But when it comes to finding a good neighborhood, when you say good neighborhood, that means a lot of things to a lot of people. What's it mean to you?
All right, well, first of all, having any of my children flip anything is not something I approve of. I want to acquire that nice house in your neighborhood and keep it. But a good neighborhood for me is certainly different than it is to anybody else, but a good neighborhood is near where you live. So you recognize the good and bad things that are going on within the neighborhood. From my perspective, I look for anchors to lock in long-term tenants, because I want my tenants to be part of a grander family that the community is a part of. So I look for big, active churches. I want to buy around them. I look for really good private schools. I want to buy around them. I look for Bay Pines Veterans Hospital here near where I live. That Bay Pines community of vets that use that to sustain them and to back them up creates a tight neighborhood. There are community centers, but somewhere, whether it be at the community center, the church, the hospital, I want to see that anchor. And I look for that very much when I'm buying an investment property to keep and rent. And as a result of that, and the fact that I really do not bother my tenants, I've had very long-term tenants who I talk to rarely unless there's a problem. And those tenants, when they leave, generally leave with a group of their neighbors soliciting me for rentals in that house.
Sure. Yeah, no, that makes great sense. It's always interesting to look at these strategies, and you see so many different things, but it's some of the simplest stuff that just having someone, kind of enumerate it and say it, that really makes a whole lot of sense. You could say, a great area. Well, a lot of people would probably get on there and look at crime statistics. They would look at, the school districts, but it's more kind of a combination approach to that. Yeah, you don't want somewhere necessarily that's an extremely high crime, but look at the other things around it. Is there a new public shopping center that went in? Is there, a church near there? Is there a good community center? And all those kind of factors making it be something good, doesn't necessarily have to have a gate on that community. So that's one of those things where I tell people that as well. And I wholeheartedly agree. It makes some of the most sense of some of the things that I've heard, but yet it's kind of some of the most simplest, doesn't take, a 50 years of real estate experience to kind of figure that out. But for people to understand it, sometimes it takes someone with 50 years of real estate experience to say it to them to really have it sink in. So I always appreciate it.
Alex, I went down to Bradenton to a luncheon meeting, and there was a woman there who I did not know. And she mentioned that she was retired and she had 12 rental houses within 2.5 miles of her home. I left that meeting so jealous, I can scarcely even comment on it, because that's just a wonderful portfolio for somebody to retire with.
Yeah, it reminds me a lot of Bill Cook. I think it's what he says, whatever's in walking distance of his area in Georgia is what he does. It's the Walmart.
5 miles to Walmart. That's
yep.
Bill, yeah.
It's a fantastic thing, and it's one of those things where I love having people on that can explain things that are simple, that can change people's lives. And that's one of those things where you can get as much education in this stuff as you want, but some of these extremely simple things when kind of shown by people that have done it for years and years, really help people to make that first step. Because you tell someone, hey, you can make a bunch of money in real estate just by walking a 5-mile radius and knocking on people's doors to buy property. You probably get more eye rolls than anyone if I told you that. But if someone like, Bill tells you that, or you hear someone like you say it really does help people. And that's what we're trying to do with this podcast is, bring people alternatives to the stock market and bring, alternative investing to the forefront and what people are thinking about, whether that's through an IRA or, through something personal. We'd love to just help bring those options out to people. And stories like that are great.
Yeah.
Now,
and, when Dykes and I do the Roth IRA class, people make the mistake of coming to the class so we can show them how to invest and how to grow their IRA, rather than seeing that by knowing about IRAs, you can help other people to help you. When I was making $8,000 a year, I took a course in tax strategies from Chuck Considine. And believe me, I didn't need much help in sheltering my $8,000 in gross income. But learning those things enabled me to go out and help someone who was in a high tax bracket do a code section 1031 exchange or do an installment sale. And so you're learning these things, not specifically to apply them for yourself, but to help other people, because it's in helping other people that they will help you, and you'll grow that tribe of friends around you that make deals easier and easier and easier and safer for you.
Oh, absolutely. Now, this kind of stuff never happens in a vacuum. People with a ton of experience, had to kind of come somewhere. Obviously you have a ton of experience and successes and failures in your life, but what was, give us a background on maybe some early educational things that you had that, are accessible to other people, maybe not necessarily a person, but maybe a book or something else that you would say, this is a great foundation.
The books are there. I mean, if you go out and read Horatio Alger stories are phenomenal. And I read, of course, American History. If you'll get Richest Man in Babylon by George Clason, or John Shaw, Building Wealth One House at a Time. There are remarkable books, but the greatest value is available from your successful neighbors. You go and talk with them and you say, I want to grow up to be just like you. Could you tell me how you did that? One of the things that I used to do when I was a young real estate agent is I would go to the hearings for variances in the community and see who are the people who are active. And I would always speak in favor of having more and better housing in Beverly, where I grew up. And a lot of the older people who I would have had to wait a long time to get involved in discussions with, got involved in discussion and debate with me at those hearings, because I went. If I had a chance to buy a note at a discount, and so I could buy a note that was owed by a school teacher at 50 cents on a dollar with a potential 15% yield, or buy a note that was owed by a capitalist investor in town to yield 6% with no discount, I would buy the 6% note, because with that 6% note became a relationship with someone who can teach me and help me, and who will teach me and help me.
Yeah, those relationships are so key. I believe with regard to you, and I always forget the exact amount of numbers on this, but it's something to the effect of like 7 different families and several hundred different deals that you've done over the years. It's one of the cooler things I've ever heard, but it just hammers home just building those relationships. You might be able to make 10% on this one deal that goes away, but if you can make 6% and then also have 20 other deals that go behind it for years worth of cash flow, that's obviously, a significantly better deal. So maybe tell us a little bit about just some of the success you've had with building those relationships.
Gary Johnston, 5 years ago, asked me to do a presentation out in Las Vegas on wealth building and relationships. And so in putting together my notes for that presentation, it turned out that in my 50 years in real estate, I have done 71 deals with 4 families. And I can't explain to people how much easier that is than to do one deal and then start over building rapport, building confidence, showing the people that you're both trustworthy and competent. Once you've done that, it becomes so much easier. One of my favorite examples is I bought a property from a guy named John Pochask, who was an old guy in his 40s, and I was 20. And he was selling that property because he's getting tired of management of some of his old, small multifamily properties. And when I bought that from him, I bought it subject to the first mortgage, and he introduced me to his banker. So I got to know the banker at the Beverly Cooperative Bank in the town where I grew up. And John carried a note for me, but he didn't know me. And as a result of not knowing me, but me proving myself by renting the property to tenants who are happy living there, they paid me so I could pay the Beverly Cooperative Bank, was happy to get their payments, so that I could pay John what I promised to pay him. That resulted in my ending up a year later managing 20 rentals for him, which gave me some more income back when I was earning $8,000 a year. And then I did a 1031 exchange where I got a commission from him for putting the exchange together. And then the guy that took the properties in exchange didn't want one of them, so I bought that from him. So I got another house. Then years later, I moved to Florida, and I made a contract to buy a house with a private first mortgage on it here in St. Pete. And I bought it subject to the lady's mortgage, and it was a 9% mortgage back in the late 80s, early 90s. And I called her up and said, "Hi, my name is Peter Fortunato. I'm going to be paying you every month. I want to make sure I've got the right address to be sure you always get your payments." And she said, "I want to be paid off." And I said, "But why?" She said, "Well, when we made the loan," and I'm not sure she made the loan, I think she probably carried the mortgage, but she did it for a family friend, a son of someone she knew, and she liked him. And she said, "I don't know you." And so I assured her I was a really nice guy and she should get to know me. And no matter what arguments I'd make, she did not want to get 9%. I said, "Well, in the event I paid you off, what are you going to do with it?" She said, "I'm going to put it in the bank." I said, "Really? What does your bank pay?" She said, "Oh, 2.5." And I said, "Well, you know, where I grew up, 2.5 is a lot less than 9. And most people think more is better." And she didn't agree. She said, "No, I don't know you. I don't want it." And I got on the telephone and called John Pochask up in Beverly, Massachusetts, the guy that I bought that property from 15 years earlier. I said, "John, I got this lady. She doesn't want to get 9% on a $50,000 mortgage from me." And he said, "What's her phone number?" And he called her up and bought the note from her and bought an assignment of the mortgage. And so while I didn't get to pay that lady, I got to pay someone else who I knew. And that's the relationships that make things easier and easier.
And I think I could sit here and talk to you for hours and hours, but we're getting kind of near the end of what our time allotment is. But if people want to, make some of those relationships, we have such a robust community of different classes and great RIAs in our neighborhoods, our areas of the Tampa Bay and also Atlanta and really anywhere in the country. You can find good stuff. But I would recommend, people that we have on are a good place to start. Pete, you have a class coming up with Bill Cook here in Tampa, I believe, correct? It's the What Box
Yes.
class that you are teaching. I'll let you give a little bit of information for that. So if people want to find out and attend and get some more great information and some more interaction with you, they can. So go ahead with that one.
All right, well, Bill and Kim Cook.com. They've got all the information. They are much better marketers than I am, or so they tell me. And they can tell you all about the class. Bill and I have a good time together, and watching Bill teach that if you do what you love, you'll never work a day in your life is amazing to watch. He is having the best time you've ever seen when he's presenting. In our market, we meet a lot. We have a lot of people who get together and visit and help and ask for help. And that's something you should build where you are and you should take advantage of. I'm shocked at all times when I ask people, have you ever sold anything? And they say yes. Have you ever bought anything? They say yes. If you ever rented anything, they say yes. I say, what are those people doing today? And they don't know because they haven't stayed in touch. That is a huge mistake.
Yeah, absolutely. I can certainly agree with that. And if anyone also is curious about signing up for the class, it's also you can get a link through our website. We don't make anything on it. We just like to try to help the people that help us. So you can also go to advantaira.com and it'll link directly to billandkimcook.com to sign up for the class. Again, that is next weekend, which is the weekend of, September 18th and 19th. And that class is in Tampa, correct, Pete?
It is.
Yeah, and then you have one in October coming up with Dykes Bodiford, if you want to give a little information on that one as well.
That's the Roth IRA class. So
yeah.
I'm sure that's always on Advanta's site because the Roth IRA class, Dykes is extraordinary.
Yeah, he's a phenomenal speaker, and I just am echoing a bit of what Pete says. But if you've never heard Bill speak, it's inspirational. He is extremely energetic, and you will feed off of the energy that he puts into it and the sincerity of what he is putting out there for the information. You're kind of what we're talking about. We asked Pete how he got his start. It's people like that can really help you get your start as well. So with that said, I really appreciate everyone that tuned in today to the Alternative Investing Advantage podcast with Advanta IRA. Pete, thank you very much for being on today, and we will talk to you next time.
All right, take care, Alex. Thank you very much, everybody.
Thanks, Pete.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.